that almost all the port infrastructure, port companies, they are close to, as I've explained, almost 35 ports which are coming in different parts of India. There are 12 major ports as well as there are 20 state level ports. Each of the port is looking at setting up a shipyard or multiple shipyards, because for a shipyard you require a marine front. So maybe another 5 years from now, okay, in terms of total number of shipyards, there are 26 shipyards in the country, and some of them are unlisted, which would be the yards where probably private equity would like to go. And but on an all India basis, we feel because every port can really set up a shipyard, and there major ports are coming out with shipyard BOT concession agreements, as well as the minor ports are also looking at setting up shipyards. We feel they could be close to maybe 20-25 shipyards at the level of Bharti ABG, which have just happened in last 1 year. They were always there, but their growth has really grown. So this sector could grow again 5 to 10 times in next 5 years. I mean, that's a sort of potential. To give you some rough numbers, global order book of shipbuilding is close to around $250 billion. So about 3 billion is also just 1% of that. And we feel in 5 to 10 years from now, India should capture close to 5 to 10% of the market. In niche segments, it has already done so. In offshore, we are probably number 3 in the world after Norway, Singapore, and OSVs, and ABG is number 2 in the world in terms of offshore supply vessels production. So in certain pockets and segments, we have done fairly well. But overall, there is a huge growth opportunity which is coming up. And another interesting thing is that automobile and shipbuilding, they go hand in hand. Japan was a leader in automobile, and they really went up in shipbuilding. Korea and China, again, growth drivers are in the automobile. Because sort of skills, one is moving on the land, another is moving on the sea. And we feel there is going to be a huge growth potential. In fact, State Bank of India has been one of the biggest financier in this particular domain. And the total numbers could become 5 to 10 times in this particular domain. Of course, this particular shipbuilding is governed by shipbuilding subsidy. Now, there is a regulatory catch there, and private sector shipyards have not been disbursed any subsidy. Now, 30% subsidy you get on export, which is on your top line. So if your margins are 10%, with subsidy it becomes 40%. Now, that's a very, very big number. And the subsidy scheme is there till 2007. Beyond that, of course, there is the industry is lobbying with the government to extend it up to 2012 minimum. And if this subsidy scheme remains, then the profitability of some of the shipyards could be, you can have 40% net profit margin, which is like very, very big. So it has to be seen. We are also helping the shipbuilding industry through their association to lobby with the government in terms of getting part of it. But that's a high growth sector.
Can you give a little bit more, because I think the one dominant theme of shipyard has been this subsidy, which is very unusual. I mean, even if it's 30% giving subsidy, it's a very unusual. I mean, there are a lot of economic logic that is being made out in comparison with other countries. But can you give a little bit of background on how that happened and how real that is? Where in a shipping, which is a much larger industry, where some of the tax benefits, if you're looking at shipmen, their income not being treated as Indian income, things like that, which is much more logical and much more larger industry, it doesn't happen. How and why this has happened and why this will continue?
Okay, see, if you know the history of subsidy, public sector shipyards in India had this subsidy because they felt that they have certain disadvantage in terms of taxes vis-a-vis the international shipbuilders. Now, we have done a computation of the various taxes that the Indian shipbuilder pays to the local government in terms of VAT, in terms of so many different types of taxes, custom duty on some of the imported items. That totals up to close to almost 20%. Okay. Now, so vis-a-vis a Chinese or a Korean or a Japanese, where the incidence of these taxes are very low, maybe they would be of the order of 2 to 3%. Indian shipbuilder is at a disadvantage by a factor of almost 15 to 20% vis-a-vis those counterparts. So the logic which went in shipping industry in terms of the tonnage tax, they said we should have a tonnage tax because we are not able to compete with the international ship owners who enjoy tonnage tax, where the incidence of tax is hardly 2-3% of the profit before tax. So the tonnage tax came in shipping. Same way, Indian shipbuilders, they lobbied with the government. In the beginning, the scheme was only to the public sector. Then subsequently, it was extended to the private sector, where they said that we are inefficient, or we are uncompetitive by a factor of 17, 18, 20% vis-a-vis the international players. On top of it, they said for people to come to India, we should have a price advantage. Even if we are, let's say, equal to Korea or Japan, still people will not come to us. We should have a differential price advantage of around 10%, then only people will come and will give us order. So that's how this logic of 30% was arrived at. Now, and government agreed, and it's another matter that some of the disbursements, public sectors have been getting the disbursements, private sector there are some issues, and that probably the industry is trying to sort it out. Going forward, this incidence of tax itself, the differential tax itself will come down to maybe 7, 8%, 10%, because new tax changes are taking place in the local country. As well as as the size of the industry matures, the additional 10% price differential that you are talking about could also go away. So what the industry is saying, that extend the scheme from 2007 to 2012. From 2012 onwards, maybe reduce the level of subsidy from 30% to 15% or maybe lower, and gradually phase it out. I mean, that's the lobbying which they're trying to do. So what they're looking at is subsidy only for the growth phase, not beyond that. Of course, there are equal number of logic which are against this, and government has told them that we would provide you support provided there is a employment potential in terms of the growth of the sector in India. And that's where we have presented a white paper to the government through the Shipbuilding Association, which talks of if the sector really grows. In case of automobile, the externalities in terms of employment potential are very, very high. You make a truck, you not only generate employment in the factory, but in terms of driving, in terms of on the road, the entire servicing. So same is the case of shipbuilding. There is a lot of external employment from a government perspective to give that kind of concession, and some of these concessions have been computed, they have been discussed, and they seem to be falling in order. So it may not remain at 30%, there could be a gradual phase out of this, but under WTO some of the subsidies are allowed if your market share globally is not more than 5% of an industry. So shipbuilding falls into that, and that seems to be the.
But that subsidy is available only to if it is
export.
not to for
No, domestic orders also if they are more than 80 meter. While for the export order more than 80, any length is fine. So some of the ship owners are trying to open up companies, the local ship owners probably outside, and then placing orders, and there is a.
But I understand private yards are also getting that subsidy.
Yes, now it is both for public and private, and that has really zoomed. In fact, Bharti's public issue was oversubscribed some 80 times. ABG was again in double digits, and they've got two large. ABG has got Standard Chartered Private Equity as their investor, and there are other players. We have been working with some of the private equity players, and they're looking at shipbuilding side, which is a very big growth opportunity. Like the way automobile sector grew in India in last 10 years, it's a similar kind of story out there.
This cannot be based on the subsidy, the growth, because first of all, this whole policy is very, very nascent, and for example, if a ship is built, it exported, and the next day it is flagged in the Indian fleet, so the shipyard still gets a subsidy by bypassing, taking this route. And secondly, if the industry really grows and becomes very big, how much money does the government have to? 30% is a huge amount. Can the government keep shelving out that kind of money? These are the kind of concerns that government has got. So whatever be the policy, as has been mentioned earlier, that it should be spelled out upfront, long term, so that the investors are aware.
What happened when we did this rough computation, what we did was we did a sort of a net present value of benefit. See, if the